All right. Yo, what's good, everybody? So welcome back to a Sunday breakdown for GTI, obviously. So I'm going to be breaking down GJ Gold. I'm also going to break down the trade that I had taken on GJ on, I believe it was Thursday, Asian session, literally almost like right after the webinar. Normally I don't trade Asian session. It's normally not a trade that I would have taken. But I just kind of want to break down the trade itself and kind of give you guys my ideology as to why I actually ended up taking that position. So when it came to me actually taking that GJ position, really it came down to the 4-hour time frame and looking at this 4-hour time frame market structure. So identifying that our main points of market structure here in the 4-hour time frame within kind of like this consolidation area, we have this area, this area, this area, this area, and this area right here. So these are our main points of structure within this 4-hour time frame, within this kind of counter trend pattern, because obviously here we have a low, here we have a high, higher low, then higher high. So we look at this as one separate trend in quotation marks, because although this is just a consolidation range. Once price have actually broken under this area here and pulled back pretty much right to where this entire, all right, hold on, my bad. 1 second. Everybody can still see my screen?
Yes.
Yeah.
Yes?
Yep.
Yeah.
All right, I don't know
Yep.
what happened.
Yeah.
I don't know what happened with my Zoom, my bad. So when price actually ended up breaking under our previous 4-hour higher low point, it comes back to like your basic market structure patterns, right? Whenever we look for a break of structure, whenever we see price actually change in structure, we look for price to retest that previous higher low point, for price to then continue to go down and continue to make new lows. And that's kind of exactly what started to actually play out here quite nicely. So we have again higher high, or high, higher low is broken the result of a lower low. 4-hour time frame, this is our kind of 4-hour low. 4-hour time frame pulled back into our previous 4-hour higher low point. Rejection candlestick here on this 4-hour time frame. Now it's not the greatest rejection candlestick, but it definitely is a rejection candlestick. And the reason why I took this trade really was because of risk reward. So when it came down to like, let me kind of just highlight this area really quick, so we can remind where this entire area is. So when it came down to me taking the position, ultimately, I knew the risks involved with taking the position. I knew I had a chance of getting stopped out. Obviously, I mean, even with every trade, I had a chance of getting stopped out. I knew my chance of getting stopped out was probably a little bit more elevated simply because we're trading during the Asian session. But you have to keep in mind, GBP, JPY is also going to move with the Asian session. There's going to be volume. Now, there's not always going to be crazy volume like it happened here during this Asian session, but there are going to be times where during the Asian session you will see volume on GJ. Now, definitely for gold, I would not trade gold during the Asian session. Like unless like I'm in a position where I'm expecting it to take a few days to play out, I would definitely not trade the Asian session during gold or on gold. But when it came down to this pretty much GJ position, I saw the rejection on the hours candlestick. I also measured it out on fibs with the pullback from this point to this point would be, I saw was a 38.20 rejection. Now, typically your stronger trends are going to bounce right off the 38.20 because it's just, it's enough of a pullback for it to be considered a lower high point. It's enough of a discount. You have to remember you want to consider pullbacks as discounts, and a 38.20% is a 38% off discount on essentially what we're looking for price to continue to go down. And again, everything at the end of the day is all based off of probabilities. So once I understood that there's a probability for price to continue to go down from this level, all I did was manage my risk. Now, I didn't take initially a big risk on the position. Pretty much right when this candlestick closed, I waited a little bit and I ended up taking a position somewhere along this area. Here is where I kind of took the position, somewhere along this candlestick is when I took the position. Stop loss went slightly above the high. Now, in terms of risk reward ratio, this was my main target all the way down here, but I did end up closing a little bit earlier. Possibly it closed around like 162,500 flat, which is over here. Just because I had already satisfied my risk reward ratio and I was up a decent amount of profit and I actually had a hard stop. So a little bit of human error on my end for actually having a hard take profit. I missed out on a possible, call it an extra 40 pips, which is a lot. But it is what it is. I'm not really upset about it because I still gained over 3 times my risk on this position. And then price continued to go down after that. So, you know, these are all little kind of like mistakes that you want to make, that you want to incorporate into your trading journal, just to kind of give you guys something to add to your trading journal. But regardless of the fact, trade worked out in my favor. It's fine. Didn't take a big risk because of, again, everything else that I was concerned about, mainly being the time of day. Hence why I didn't take a bigger position, because I normally trade heavy during the London session, but Asian session trades, especially on GJ, I typically won't take like that heavy of a position size. So overall, the risk was maybe like a 2%, 2.1% risk in total. And the main reason, again, I took the trade was because I saw a potential for 5 times, a 5 risk reward ratio. Now, when it comes to GJ tonight, so GJ obviously has been bouncing off 161, 840 for the last few weeks. And it's been bouncing in between these two levels, really. Although price did pierce above on this weekly time frame, price has been bouncing between 164, 142, and 161, 840. So realistically, I would like to see price continue to go down, obviously, because it's just the thing I'm kind of more inclined on looking at, because of the way this market structure is actually forming. You have this double top pattern, you have a break of this neckline, and then you have a nice close under the neckline here. But I need to see what price does once it does hit this area of support, because last week and last daily candlestick, price ended up closing back above support, which is signs of rejection, which is signs that there is buying pressure. But I do see price actually breaking under and continuing to actually trade lower, possibly down into the 160s. Ultimately, because of the way this market structure is actually forming here right now on this hour time frame. Realistically, though, you know, we have a lower high, lower low, lower low, and then we have a possible lower high point here. So with this market structure kind of giving us this bearish trend, realistically, for you to start looking at buy, we would have to see a break above 162, 800, let's call it. That would be the safest buy. I'm not going to be looking to buy. What I'm going to be waiting for personally is for a break of support, because then we have a confirmed break, a pullback, a retest, and I want to see this area of previous support hold as resistance. Once I can see price actually hold as resistance, then it gives me the probability that price is going to continue to go down. Then you ask yourselves a question, well, where's price most likely going to go to next? All you simply have to do is look left at the nearest areas of major support and resistance, which ultimately you have pretty much 160 flat is where price tried going down to. So I would start setting my targets up at 160, 500 and 160, 50 pip difference from these two price points. So that's kind of how I would set up my targets. And then stop loss obviously just goes above the highest point price has reached after it rejected resistance. Do I think we could get that break and retest tonight? The probability is definitely there. I mean, that's pretty much what I'm going to wait for. If I don't get a break and retest, most likely I will not be taking the position, just because I want to confirm break and up, and for price to actually hold that area of resistance. Because if you look at what happened over here a few weeks ago, although price did break under and it did give you this retest here, it pulled right back up, didn't hit 160, 160 flat. It went to 160,500, which is why I would set a take profit at 160,500 and then target 160. But notice how when price actually ended up coming all the way back here, it actually ended up continuing to go down, continue to go up, and then give us kind of a break and retest towards the upside. So, you know, this level definitely is a level I want to be a little bit more conservative with. So I'm going to take a more conservative approach in terms of like entering the market off of this level. Now, when it comes to gold, so gold on the daily time frame obviously ended up closing above 1755, 500. The weekly time frame obviously closed above as well. Our time frame, this could have been a clear as day break and retest setup for you to actually take. Or you could have looked taken a buy somewhere along this area over here. It would have been a little bit more difficult because of the way, I mean, it ultimately depends on the trader, because the way price closed under and closed above, this would have definitely have to have been a lower time frame trade, such as the 15-minute time frame, bullish engulfing or bullish variation pattern, and then price continued to go up from there. Targets would have been up here. That could have been a simple trade. But now that the weekly time frame has actually ended up closing above 1755, again, we've closed back above a previous area of support. So the best thing for you to do in a situation like this is to wait for price to come back down into support, wait and see that support is established, and look for price to go up into the next area of resistance or major resistance, which is 1786. But for that, you have to keep in mind, this area of resistance on the hour time frame has a higher probability of getting hit than 1786. So you'd want to try and formulate a trade and set the trade up to a point where you're going to get a good enough risk reward ratio to take profit out here, because we don't know what's going to happen after price gets to this point. If price gets to this point, it could break through, great, you'll make more money. If it doesn't, then you have the chance of price completely going against you, or I mean, possibly even stopping you at break even. I wouldn't want to say you're going to lose money, but ultimately it depends on the trader. But by this point, for sure, if price hits 1766, your stop should be break even. If price does give us that break and retest at 1755. So that's pretty much what I'm going to be waiting for on gold. I haven't taken too many positions on gold. Ultimately, just been trading more GJ just because I see price a little bit cleaner. I've been following price very consistently for quite some time. So it's a little bit easier for me to trade at this point in time. And again, like I only really want to trade like the cleanest setups. If I see I have an A+ setup on GJ and like an A setup on gold, then I'd rather go with the A+ setup, obviously, right? So that is going to conclude the breakdown. Does anybody have any questions or anything they would like me to go over?
Yeah, bro, I got a question for you.
Yeah.
On gold, I was looking at it on that 4-hour time frame for that break and retest. How do you really know when to, scale down and go to that hourly? Because I know you really more so wait for that break and retest on that 4-hour, because I think I would have missed it. I was looking at it, but that 1-hour time frame candle was pretty big.
Yeah, so definitely when this candlestick closed under, you gotta wait. In a position where this candlestick closes under, it's okay. Well, let's wait for a confirmed break because we need to see the next candlestick close under. Then price is now trading lower. Once price is trading under your area of support, the best thing for you to do is wait for the retest and then look to go short. But once price started to actually break back above, and this is actually forming as a tested candle, at that point in time, you could have dropped down to like a 30-minute or a 15-minute and look to take that buy position. Obviously, taking a trade here after this 15-minute close wouldn't have made any sense because your stops have to go here and you're going to get like a 1-to-1 risk reward ratio unless you're looking for a position way up here. But just kind of giving you like the raw, like bare example. A better example would be on GJ on the position that I took over here. 4-hour level structure, broke under, came back up, retested, clean 4-hour candlestick rejection. Then that's when you drop down to the lower time frame, such as a 30-minute. And ultimately, how you take the entry is going to be up to you as a trader. If you're a little bit more conservative, then you're going to wait for a variation. You're going to wait for an engulfing candlestick, which this would have been your entry signal here. Me personally, I'm a little bit more aggressive. Once I see everything line up on the 4-hour time frame, then really I'm just kind of looking for a place to enter, because I rather personally enter a trade with a smaller stop loss, maybe a little bit more aggressively, right? But I'm going to be able to squeeze more reward ratio for my risk, so it makes up for my losses when I do encounter those losses because I entered a little bit more aggressively. And again, ultimately, it's just really about balance. If you're going to be a little bit more conservative, then you're going to take less losing positions. If you're going to be a little bit more aggressive, then you may take more losing positions, but you're going to be increasing your risk to reward ratio.
Okay, yeah, I get that. 100%. That's like more like a perfect setup almost on that GJ. But on the gold, would you have taken that trade? Because I didn't take it, because I was thinking to myself, like I was thinking in my head too, like I don't think you would have probably took it, because I've been trying to get away from that 15-minute. I know you were saying that you really get away from that 15-minute.
Personally, I can't answer that with 100% confidence because I'm speaking in hindsight right now because I've already seen the move. Like let's say coming to live, like market conditions and prices actually moving, would I have taken the position? It would probably be a 50-50 for me ultimately, because when was that? London session Thursday? That was New York session. So I wouldn't have taken the trade. I traded during the London session and price was over here during the London session. So no, I wouldn't have taken this trade because it's outside of my trading times. I mean, by this time, this is like 9:30. I'm just waking up, from my London session recovery, if that's how you want to call it. So no, I wouldn't have taken this position.
Okay. I appreciate it, bro.
Yeah.
Yo, bro, I got a question for GJ.
Yeah.
So due to the daily rejection, what if due to the daily rejection, right? What if the 4-hour then rejects? Could you go in for buys?
You could go in for buys, but again, I would just simply be cautious just because it does look like price is trying to actually start trading lower. Like if we look at this overall consolidation range, we pay attention to the highs Each high significantly gone lower and lower. And if we look at more relevant price action from when is this, the beginning of June to about now, our lows have maintained the same, but our highs are getting lower and lower. So we're making lows and lower, or we're making lows and lower high points. Typically, when we see prices making lows and lower high points, we're going to see price break to the downside. Now we also have a break of structure here on this 4-hour time frame. Ultimately, price is consolidating. So yes, price does have a probability of shooting up from this area. But again, like right now, I see there's a higher probability for price to continue to go down. So I'm going to wait for that unless price could show me that it's going to go up, because the way price action is forming right now, it just looks like it's going to continue to go down. Now, when it comes to London session and I see, you know, a big fat rejection on this bearish candlestick, and I may see a bullish engulfing here on this 4-hour, then this is a signal for me to buy. Then you have to ask yourselves, well, where could price possibly go to if it does take a buy? That's right here, 164, 134, where it's gone to multiple times after rejection of this area of support. Ultimately, like, you have to take variable changes into account, right? Because price could break under and I could say sells, but then break right back above and give me a setup like this. And by the time, you know, these 4-hour candlesticks print, I'm going to be like, yeah, no, sells right out of the picture. We're looking for buys now, you know? So
Yeah.
I'm not, you have to keep your own judgment in mind at all times. Because I can say sells right now, but then before London session even opens, like a second before, I can say buys.
Yeah, I got you.
Yeah.
Thanks.
Yeah, no problem.
Hey, Ro, for
Okay.
for that RSI, brother, I only see like maybe 2 videos on that little indicator down there
Yeah.
that you have. You really don't use it?
No, I try and focus on price as much as possible. I'll maybe use it sometimes for like double bottom patterns to see if there's any divergence. But other than that, no, I mainly try and focus on price.
Yo, quick question, boss.
Yeah,
All right. So before you said that type A's, it's like 5 confirmation, 4 confirmations.
yeah,
Type B's are like 3, right? So would you count your like your engulfing and your variations as a part of that confirmation?
for sure.
Confirmations?
It's added confirmation for sure.
All
Because
right.
you could take like a type B setup where you don't have like a crystal clean entry, you're entering based off rejections, and you're trading very aggressively, but then you see an entry, you see like an engulfing print, and then that could turn that type B setup into a type A setup, but you're already in the position. So then it would turn into a type A setup.
True. The reason why I asked is because like I've been really focusing on back testing and like creating my own system.
Yeah,
And I find that like most of the confluences that you talk about, they really say, like they really say, oh, you should enter the market at this point or right there. But I think like the candlesticks, they say exactly when you should enter, if that makes sense to you. So I've been like trying to keep that, like not include that in my confirmations. Cause like, let's say your retest your rejection, that would say, okay, I enter right here. But then an engulfing would say, okay, I enter right now and right here. If that makes sense to you.
yeah, 100%. I mean, ultimately, like you said, again, like it just comes down to the trader, the type of trader you are. You know, there's no one right way to trade. You know, you have traders that trade limit orders, you have traders that trade stop orders, you have traders that trade market execution orders. You know, there's no one right way to trade, but the overall foundation of what I'm trying to teach you is you have to adopt a probabilistic mindset. You have to look at like, you know, there's like reasons why the casino always has an edge over their clients. They find the probabilities and let their probabilities play out over a long period of time. It's just like when you go to like, I don't know, random example. It's like, let's say when you go to like the roulette table, it's not a 50-50 chance because the casino incorporated the green color, right? So the casino now has the edge over the client. And over a long period of time, that and the casino also has table maxes too. So over a long period of time, if a client goes in with I don't know, $200,000 and they're playing the table max, over a long period of time, eventually they're going to blow it because the casino has the edge over the player. And that's the same thing in trading. You have to play, you have to trade your probabilities and focus on your edge. Because again, you should have a positive expectancy when you have an edge in trading.
Sure. All right, bro. Yo, I really appreciate it, man. Thanks so much.
Yeah, of course.
Bro, would you take a break and retest if price comes back up to that yellow line that you have there? Right where it broke below?
Right here?
No, the next one.
Here.
Yeah.
For sales,
Yeah,
I mean, I would really have to see what it looks like. But possibly I could, yes.
okay, thanks.
Yeah, but if I take a sells here, I'm gonna target here. I'm not gonna target down here. But you know, I would have to see what price looks like. But yes, I wouldn't be opposed to taking a break and retest short here.
Okay, bro, thanks.
So any other questions?
Yeah, I've got another question, bro.
Let's go, bro.
Okay, so how late, like, let's say you're looking for like a buy on gold or something, like, what's the latest that you decide to say, oh, I'm gonna enter the market, like 12, 1, like how late would you?
The latest I would enter the market is like, bro, like if I'm not in by 3:30, then there's most likely no trade.
Yeah,
Because you gotta remember, like, price, I mean, sometimes I may enter like at 4 AM, which is very rare, but like my period of typically when I'm in a position is gonna be roughly between 1 and 3 AM. Because for me, I like to get in before the move actually happened to maximize my reward as much as I possibly can. You know, I don't like to get in during the middle of the move. I mean, like you said, every trader is completely different. But personally, you know, looking at my past or, you know, even remembering just the last few trades off the top of my head, over the last few weeks, or not even over the last few years, the majority of the time I'm entering between 1 to 3 AM, which is that learning session time.
Okay, okay. All right, man, appreciate it.
Yeah.
Hey, roll for right there, GJ. That that move that you had marked up looked perfect. Now, right now we're in a little range with GJ, so basically we would have to wait to see if we do a break and a retest on that yellow line where market's at right now.
On the yellow line,
No, on the white line near the market price right now.
that's what I'm gonna be waiting for, because again, it gives me confirmation that there isn't as much buying pressure as there was, you know, a few weeks ago at this area. After I see the confirmation that there's not as much buying pressures and that there's not enough buyers interested in pushing price up from this point, then I would like to see the break. And the retest would be to see if sellers are interested in selling this area. If sellers are obviously interested, I'm gonna go short with the sellers.
I see. And the break has to happen on the 4 hour.
Yes, I would like to see it happen on the 4 hour, but I wouldn't be opposed to taking a break and retest on the hour time frame. The only thing about taking a break and retest on the hour time frame is that there could be possible fake outs such as this that happened over here, right? So I would like to see like a nice break, a pullback retest, then for price to continue to go down.
Now when you say a pullback, that's when we have to consider candle confirmations on the higher
Yes.
time frame.
Yes,
Oh, okay. Yeah, I've been studying. I'm in Mexico right now, and I've been studying back to back the whole last week. I've been studying the whole course all over again, bro.
it's
Because
awesome, bro.
I failed a 100K challenge, but you know I know where I messed up at. I know
Yeah.
that I didn't trade in my time zone. I messed up. I shouldn't have done that, but now that I'm studying, now I could really see all the price action, market structures, and all that stuff more clearly. And I hopped in on the last Zoom call you did, like what, 2-3 days ago.
Yeah.
So I'm trying to be consistent here. Mexico's a tough country, brother.
Yeah, I can imagine.
But thank you, bro.
Hey,
Good luck
hey,
now.
Raul.
Yeah.
So I wanted to ask you a quick question. So per day of trading, right? Do you go in for multiple entries, multiple positions, or do you usually just go in for one position on the London session and just, you just do one, or how do you do it? Like,
Typically,
you go in for multiple?
typically I just do one and done.
Okay.
Yeah.
All right, sounds good. Yeah, that was it. Thank you.
Yo, I've got another question, bro.
Yeah.
What was I gonna say? Just give me a second, because I wrote down all my questions and everything.
No problem.
So how often do you like say you're gonna like redo your technicals? Like say you're gonna do support resistance zones and all that, like once per week, every 2 weeks, or each time you decide you're gonna enter the market, you redo the entire thing.
Only when it makes sense.
Okay. All right, man. Yeah, I guess that's it for me today. Appreciate it.
No problem, bro. Yeah,
Hey, bro, which time zone indicator do you use?
I mean, bro, they're all really the same. You just gotta look up session indicators. I use this one called sessions.
Okay, cool.
Yeah, they're all the same though.
Okay, cool. Appreciate it, man.
Yeah, no problem. So.
Yeah.
any other
Raul?
questions? Yeah,
Yeah, so what time frame you consider like candle closure under that 840 support
4 hour.
per hour?
Yeah,
So if
Any-
price is trading at a level of supply and demand, you would look for the confirmation of the break on the forward time frame or the daily time frame?
4 hour.
Before.
Yeah, you also do have to consult with the daily though, always. Like when the next trading day opens up, you always gotta consult with the daily, you know? So, because the 4 hour could close under and break, but the daily close right back above and it's close tested.
Ah, understood.
Harold, I have a question.
Yeah.
When you trade, like when you're just watching the market in general, like are you on the 4 hour time frame, watching the market, see where it moves, and then when you're ready to take an entry, you move to the 1 hour, or are you just like watching the market through the 1 hour time frame instead?
When I'm ready to take an entry, I move to the 1 hour.
Okay, so you just basically
Right.
watch listing throughout the 4 hour time frame instead.
Yeah, basically.
I got you.
And do you draw your fibs on the 4 hour or the daily or the
Bro,
1 hour?
I'll probably draw fibs like once in a blue moon. I don't really focus on fibs too much. I just try and mainly focus on price.
True.
When
Alright,
I draw fibs, it's because I'm more curious to see what percentage prices pulled back.
okay. All right, appreciate it.
I got something, oh. So
Yeah.
right here, brother, what we have to see also, right where price is at, is some type of what just break above that little range, or would you consider this is considered now a downtrend, right? Because we're making new lower highs, lower lows, lower high, lower low, but we're stuck in a range right now, so it's kind of hard to make a decision until we see price action.
It'll be a lot easier to make a decision when you see either a rejection or a break of a major area of support or resistance, vice versa.
How many candles you think for some type of confirmation?
2, 3.
Okay. It's starting to make sense now, brother. It's like about what time you got right now?
Say it again.
What's your time right now? What time you got?
What do you mean by what time I got?
What's your time right now? What time you got? It's 7 p.m. over here where I'm at, 7:30.
That's 8:35.
Oh, okay. What I was saying, it makes sense. So 2-3 candles will be what, London session?
On the 4 hour, no, there's like about a candlestick left. After this one close, obviously.
Yes, sir. Yes, sir.
Rose, I have a question when it comes to like your level placement, right?
Yeah.
So do you use the close of the candle or the wick of the candle?
The close.
The close of the candle.
Yeah, I'll look at, well, when it comes to level placement, you look at both really.
Oh, okay. So in a situation where if you draw your level from the close, right? But that candle also has a wick, that would be considered a zone. So would you be looking to sell if it closed under, or would you still be looking for buys in the zone?
I mean, you gotta keep in mind, it's all a zone. So I would like to see like a clean break. How I differentiate the zone might be how you differentiate the zone.
Hmm. Okay. Okay. All right.
Yeah.
So say for example, right? So right where price is trading at right now. So you see how the line on the close, that 4-inch candle there, right? But it didn't break underneath the wick. So you would wait for the candles to close below the wick as well.
I would wait for the candlesticks to close under, of course.
Okay.
All right, something before anybody forgets or doesn't point out. Right there, we can see on the bottom that we have basically news for GJ. How those news will impact this market.
You have to wait and see. Realistically, it depends if it's high impact news or not. Realistically, like if you see high impact news, I wouldn't recommend that you trade during those times.
Okay. So right now with this, oh, if you zoom in a little bit on your chart, would that be considered a bearish engulfing? Those last two candles right now?
Well, this one price currently is engulfing the previous candlestick, yes. So, you know,
We gotta wait.
yeah, I would like to see a break. Once I see the break, then I can make a better decision as to what position I'm looking to take. You gotta remember too, like it's Sunday, you know, this. Definitely on Sundays, I don't expect a lot of volume during Asian session. So I wanna wait and see what price will look like during London. If price breaks by then I'm gonna look short. If price rejects, then I may look to take buys.
I see that. Hey, for the signals, do you be sending out the signals or you have somebody else do it?
No, I don't. I have somebody else that does it.
Oh yeah, Raul, could you go to EJ real quick? Oh yeah, let's say if this 4 hour was to close below, would you just wait for like a 1 hour pullback to like short to like 160, I mean 134, maybe?
Nah, I'd wait for a break of this area here, maybe a
Okay.
retest to look to go short.
Got you.
Why did he choose that area right there? Oh,
Because it's your previous low.
thank you.
Bro, can you please take a quick look at US 30?
The concept stays the same. You know, right now US 30 is kind of trading like in between major areas. So I would like to see it pull back into this area here before looking to buy, if you didn't already buy here.
I took a buy, but I closed my position on Friday.
And that's cool right there. I have a sale going on since that top right there. That's what's up.
Yeah. Does anybody else have any other questions?
I'm all set.
We good?
Uh,
Appreciate you.
I just want to say that like this past month, I've been